Hey guys, welcome to another video brought to you by Total Control Traders. If you know others that may benefit from the content we provide, please consider retweeting and sharing our channel. Right, let's get right into the market today. Still in that megaphone pattern. We saw a bounce on SPX today. Now remember, when what's today? Thursday, Tuesday. I said this trend line is the first must hold, and yesterday we lost it. And following that is the 0.382, which we also lost, and then it's gonna be the 0.5, and then the GP. Now 0.5 was key. 0.5 was key because of this previous trend line that was pushing us down on the consolidation from February 16th. We can see triple rejection on this trend line, and now we have back tested this trend line perfectly, timing wise. Whether it's timing wise to the dollar, to the penny kind of things, everything worked out perfect on this. And that's why earlier today, when I saw the touch of this, the 0.5 alongside this previous high rejection, the one-to-one rejection, as well as this trend line, this triple confluence right here, I sold my bear plays and didn't really go on bull plays, but more so looking at it as slowly gonna reaccumulate bear plays. Now, the reason why I decided not to go back onto the bull play is essentially right here. It's, if you look at the longer term chart, this is in the middle of the zone, no man's land, no trading area. It didn't make sense for risk to reward wise. Now, if you're looking at the daily, right here is right about that middle of both bulls as well as bears thesis are going to be strong. With this hold, the bounce from here, even with the bounce from the GP, you could argue that there is still a chance at the new all-time high, 4,000 to 4050. But because we bounced from the 0.5 and it's a relatively strong bounce straight to the GP right at the close, and we closed today right in the reverse GP, that's a little bit of a concern. But because the bounce went straight from 0.5 to reverse GP in one single day, that is relatively strong. It gives a chance, it still has a chance at the new all-time high. So with that being the bull thesis, the bear thesis is, as we're seeing right now and playing out actually. So the bear thesis is, this is just a bounce, back test of this previous trend line, the 0.5. It makes sense that we're going to be bouncing from here, and that's why this was one of the key area that I had marked. From here, if we were to reject from the GP here, going into tomorrow, seeing a lack of follow through, because essentially we are still trading under that daily 8. If we see a lack of follow through tomorrow to the upside, the bear thesis is we're coming straight back down over the next 1, 2, I would say about 2 to 3 days. It might take 4. The 4th day would make the most sense, but I'd be looking at ideally probably 2 to 3 days coming back down into the GP. Now this, remember, it's a quad confluence zone. First being this trend line. If we're gonna take 2 to 3 days, we're probably gonna break down under this trend line, this previous resistance trend line. We'll call it February 16th trend line, as well as this potential lower trend line of the megaphone, the inner lower trend line of the rising megaphone. So that's the second one. GP being the third one. Key zone being the fourth one. So this is a quad confluence. Bulls must hold. The bear thesis is if we're to reverse from the GP from here, we will be looking down further past the 0.5 that we're bouncing from today at the GP. Now the last must hold is the outside lower trend line of this rising megaphone pattern. We can see multiple bounces ever since breaking into it, multiple bounces. and then didn't quite come back to touch, but we touched here, and then we had another touch here. So now it's been more than 3 touches. Upon the next touch, there is a chance of breaking down under. If we do break down under, we'll be looking down at further downward price action, with the GP of the whole move would somewhat line up with this previous high. The 0.5 would make sense. You can see rejection, had trouble here again, and then broke over, had trouble here again, broke over, never back tested. 35.80 would be, or not too sure what it is on SPY, but it'd be about 35.80 on SPX. So, meaning if it were to break down, let's take a look. That's 5% move downwards, and so far we have had 3%. Going into the GP would be 4%. Going to the trend line would be 5%. So it would be another 5% move. So be patient. The market is still choppy. Now, the other thing that I noticed today was the interesting part that I mentioned. Let's see, Thursday, Wednesday, Tuesday, Monday. Monday? Yeah, the interesting theory that I mentioned on Monday, essentially it played out. On Monday's video, I discussed that there was a spinning bottom. Yeah, spinning bottom candle, similar to here. Spinning bottom with huge recovery the next day, huge recovery the next day, followed by a potential 3 black crow pattern. And essentially it did play out, but it's just a matter of us getting to that 3 black crow pattern a little bit earlier intraday wise. If we're to look at, I believe it's March 4th. Yeah, so if we were to look at March 4th, the drop started at 10 o'clock, and then we were unable to bounce over it for the remainder of into the close. So it didn't give too much of time to bounce over it. Whereas today, this 3rd black crow pattern, the drop started at 5 o'clock, and then the bounce started at 9 o'clock. So it gave plenty of time for the daily candle to turn green. But essentially it was, you look at it, it's 1, 2, 3 drops and then bounce. So this bounce, the next bounce basically just came earlier today, but it was 1, 2, 3 drop and bounce on the same day. So that actually worked out surprisingly well. Meaning, since Monday, the call out was out there already for the potential of triple drop, which surprisingly, a little bit surprisingly, it did happen, and to the exact first price target. Next to price target GP, we are still in a 4-hour downtrend. Daily essentially is still in an uptrend, but the volatility is getting a lot bigger. So for bulls, you're going to want to see follow through tomorrow, breaking over back into this wedge for potential of new all-time high versus getting rejected at GP. For bears, you want to see the rejection at GP coming straight back down over the next 2-3 days, breaking the low of today into that GP before the next reaction. So SPX, know your thesis. It is still choppy out there. It can be choppy if you don't have a thesis of ready for what's potentially to happen. Laid out the perfect game plan for you guys since Monday. Hope you guys followed it. This was a perfect play. All right, next is NAS. NAS still relatively weak versus the other markets, and let me take a look at this. Okay, yeah. So part of the reason why I didn't play TZA yesterday versus SQQQ, decided to go into SQQQ because TZA or Russell's has dropped more by yesterday. However, it did drop a lot more still comparing to QQQ. So the bounce was a whole lot more today. Seems like it's just a lot more volatile, which makes sense because it is small caps. So going forward, I'll probably be focusing on Russell a little bit more. But before then, let's cover QQQ first. NASDAQ. All right. So today, at the same time that the SPX was at the 0.5. Nasdaq was near, right on top of that GP. So made sense that the market was going to bounce. However, you can see Nasdaq was still weak. It did not even turn the candle green at all. We are still trading under the daily 8 with increasing bear volume. Tomorrow is going to be a telltale sign, because today, essentially, even though we broke down, made a lower high, lower low, we did not close in the lower low. Charts, let's see. Yeah, I don't really want to remove them yet. They could still come in play, depending on where we bounce from. If this follow through tomorrow, we could see a back test. Essentially, this is a real body trend line, so we could see a back test up to here. But let's see. Yeah, so we closed right on that support. We wicked down, closed right on it. So essentially, the bears was unable to close it, making a new lower low for closing price wise. The wick did make a lower low. So NAS remains weaker. Tomorrow should be able to give us a little bit of direction, whether if we're going to be bouncing to retouch the trend line, retest the trend line, or we're going to see follow through to the downside. If we do see follow through to the downside, let's see, 1, 2. I would anticipate further follow through upon the break of this key zone right here. Now, with NAS, if today is the low marking at the GP, it's arguable. Now, I'm not saying that it's for sure going to work out, because the chances are a lot less now due to the break of this trend line. It's arguable that the inverse head and shoulders trend is still there, or pattern is still there. You look at this head, or shoulder very visible, head very visible. This shoulder is not, essentially you want it here to be the shoulder, and that's why I said on the break of this trend line it becomes invalidated. But the reason why I say it's arguable is you can go, basically you look at this, is still one single move on the daily. It's a lower low, lower high, lower low. It didn't go lower low, higher high, and then lower low. So it's arguable that this could still be the shoulder, but chances are a lot slimmer now due to the break of the trend line. So next is Russell 2000, the small cap, the volatility one, the volatile one. But daily bull divergence. So this was near the right around that time where SPX and NAS decided to bounce, and we saw a formation of a daily bull divergence. You can see RSI made a lower low while the price was making higher low. Daily bull divergence, I would expect further follow through on this. Bull volume is very significant comparing to previous 3 days bear volume. From here, wouldn't be touching TZA for some time. If you want, you could consider playing TNA. From here, I would expect at least a touch of the daily 8. Likely a bounce to the 0.382, which would bring us, depending on how fast we get there, we're already almost there. It's just above the key zone. So anticipation, let's see. 0.5 would somewhat make sense. It's just below 0.5. Other than that, I'm not seeing clear rejection, clear zones. So you could say that there is a zone around there, multiple rejections, and then became support before a breakdown, coming back to back test as rejection again. So that is noticeable, but that would bring us to the 0.786 right there, 0.786. So now, not very many clear zones on Russell as to where it's going to bounce to, but I would expect further follow through on this pattern. First target would be looking around the 0.382, 2200. Next, following that is quad 2, 2222.7. Right. Dow's still very strong, bouncing from just below the 0.382 and the previous high resistance. So we can see here we had a pop and then a complete breakdown, complete rejection. So this was a notable zone, and then it became a resistance again, and now we're finding support right there. Now essentially this should be a zone. It just so happens to work out pennies off of this previous high. What was it? 32081.5 08. Okay, so it's about $7, 7.3 off. So the reason why I say this should be a zone is because of these two highs, 4.6. Okay, so mark it there. That makes more sense. As for this one, the next zone down, we're gonna need to adjust it a little bit. Right there would make sense. Seems like there's a lot of zones on Dow versus other tickers or other indexes. I don't really like that one. Okay, this one will make sense too. Support here. All right, 3 key zones to watch for. And then as we break them, we will find new ones. But the current most recent 3 key zones, bouncing from that first one. Let's see what happens next. Today, I'm going to do a little bit of a deep dive on the market, try to get a sense of where the market's going. Lately, it's just been straight chop. So we're going to need to see whether, if there's early indicators of what's going on. Not seeing much on the US 10-year over 2-year. Not seeing much on the VIX. Gold is still in that bull flag formation on, what was it, monthly bull flag? Oh, monthly we actually broke down under the monthly 8. But we are seeing a bounce from this repeat pattern. So over the next 4 months, let's see if we get a bounce from there. And US dollars finding a support daily. Oh no, this is monthly bull divergence. US dollars making new highs. Even with the market bouncing, US dollars making new highs. Anticipation, we did break over that next key resistance again. This one, what is it at? 92,824. We broke over that key resistance. So I would anticipate further downward price action to come on the market. We are getting a little bit extended from there. So this could be a breakout fake out, even though we did close over it. Let's see if tomorrow comes back down. We're going to need a back test of this previous trend line, this upper trend line of the channel. So key moment today, tomorrow, watch US dollars. It should give indication if we were to reject from here, market should see some bullish actions. Do note that US dollars is in a daily, a very clear daily uptrend after a long-term consolidation. Now we are in a daily uptrend, seeing the market pull back in the meanwhile. All right, that's it for the market. Next is hottest tickers. First one, Bitcoin. Breaking down. Nothing significant. Yeah, nothing significant yet. We are coming up to the GP and we are bouncing just above it as the market bounced to. The closer GP, that's where we're finding a stall from, but we did wick from under it. So Bitcoin remains weak. Next is Tesla. There was an amazing play on Tesla today. Made a 100-some% trade on Tesla today. It was a bounce play. Early on, you were able to notice that the relative strength existed within Tesla. Tesla is one of the tickers that's very easy to recognize the relative strength and weakness early on, thus allowing you to determine which direction you want to be trading if you're looking at scalping for intraday scalp kind of thing. Tesla, one of the easier ones, so make sure to keep it on your top watch. Today, we are seeing a bounce on Tesla right above that GP. Decent bull volume. We were a little bit extended from the daily 8. I would anticipate further downward price action to come on Tesla. The daily trend is in a downtrend. Let's see what the reaction around that daily 8 looks like. So short term wise, would expect price to go up a little bit further before a rejection. All right, next one is TLRY, TLRY. Saw a little bit of bullish action today from the key previous resistance. We can see rejection, broke over support, triple support here, and opened below today, got immediately bought up. So TLRY, same with APHA, looking bullish from here as long as we hold this 22. Was it 22? 21.58. Key price to hold. Why is this 22 showing under it? That's weird. Oh, that's what it is. There we go. All right, 21.58 must hold. But from here, let's see what the lying chart looks like. Ooh, this looks nice. Potential for an ABCD pattern. A, B, and let's see if this is the C. We're gonna need to see a follow through tomorrow to confirm the pattern. Confirm the potential for the pattern at least. So let's see further bullish action tomorrow. I like how it's started off as low bull volume and closing near the high of day. Gives a big chance of potential increasing bull volume. There's a chance that, when I look at this chart, it's kind of interesting. Increasing bear volume couldn't really push it down, and then low bull volume pushing it back up, meaning that there's a chance that we are running out of sellers. So if we get increasing bull volume tomorrow, we should see further upward price action to come. Keep your eyes on marijuana sector. Next is PLTR. Bullish action today, bounce with the rest of the market. Closing right on that trend line. Nothing significant to note. Gonna have to see whether if we get increasing bull volume tomorrow. Next is FSR. Bounce was coming. Well, we went down a whole dollar below though. Okay. It was essentially from a point in the chart that makes sense. So if we were to look at the chart, previous rejection, rejection again, and then real body rejections again. Should have marked this as a zone instead of a basing it purely off of a trend line. Because if you were to mark it, oh wow, it goes back to even here. Goes back as far as here. So the previous price action that got pinned in between, essentially there were two key zones that should have been marked, but I only marked the bottom. The bottom one. So this is the upper part of the key zone. We can see multiple rejections, unable to close over, opened above it, and then got sold off, and then still unable to close above it. Lots of opening above, but closing in that zone, and then wicking under it. 1770. So essentially 1770 should be the high end of it. And then there we go. That makes a whole lot more sense. So we did not lose the key zone. The bottom part of the key zone where all these real bodies were unable to close over for the longest time or under. So from here, would expect follow through on this bounce to at least the 88, followed by 0.382. GP doesn't make sense. 0.5 would somewhat make sense too. We'll be right around there. Don't like it. What is it? 2096, 99, 21. Around that $21 mark. So first, 88, then 0.382, then the 0.5. You can see multiple supports. 4 supports, 5 supports, broke down under. No rejections yet. Yeah, so 5 supports, no rejection yet. Let's see the balance. I would anticipate the likely scenario of touching the 0.5 due to this multiple supports to reject from here. So there is quite a bit of upward potential, 18% upside potential. FSR worth looking at. We're gonna need to see market cooperation for this play to work out though. So next is W. Bouncing from the inside of the inner wedge trend line, inner wedge upper trend line, inner wedge upper trend. Yeah, bouncing from the inner wedge upper trend line that we can see rejection on the real bodies, multiple, 1, 2, 3, 4. 4 rejections on the real body before breaking out, and now we have back tested it. Essentially, we did break under the GP, which is not good, but we did not close under it. So tomorrow we're gonna need to see follow through. Essentially, this daily, the daily bear divergence has now played out. On this next follow through, I want to see a break to new all-time high. This chart is set up, ready to go. Let's see that follow through. Don't let Wayfair off of your charts. Considering, so after hours, we are up a little bit, nothing significant. If we see that follow through tomorrow, I would consider adding to the position. Next is, oh, that's it for the hottest tickers. And there's A few more tickers, requested tickers and whatnot to cover. First one, RBLX. We got amazing bounce today. That's weird. I swear I drew it from the bottom. Okay, so on the intraday charts, it shows the low on IPO is 60.89 versus on the daily it shows the low on IPO is 60.50. Interesting. Regardless, we bounced from that IPO low, and we came straight up to this key zone that we found supports on before, and we are seeing a wick off of it. This has been an amazing bounce on RBLX. 15% bounce in one single day. Now, let's see follow through tomorrow. Same idea. I'm going to stop saying that. It's the same thing for every single chart. We're going to need to see follow through on a majority of the charts to confirm bullish action, reversal, inverse head and shoulders, whichever pattern it is. They're all going to be looking for that follow through tomorrow. Next is BA. What an amazing bounce today, stopping right underneath that 88. BA came out with news that they are resuming delivery of their plane this Friday. Huge news. Funny thing is, we did see the flow come in. Was it Monday? Insiders, you know. But yeah, BA. Boeing. We opened below the GP and then straight bounce from there. Nice daily volume based on the news. Volume is not as great even with the news, to be honest. And we did close under the daily, which is okay because we were pretty far extended from it. So this could be just a bounce from here. I don't see any reason why, aside from the news, you know, there's no noticeable, aside from this little rejections here. It doesn't backtest here either. So I would anticipate not too much of a follow through, even though the shorter time frames argue otherwise. If you look at the 15-30 minute, we had a beautiful, so from the bounce today, 7:30, 8:30, the chart was still weak early on, up until 8:30, 9 o'clock the news came out, 9:30 the news came out, and then we saw big volume pop from there, getting straight over that 30-minute 8, and then we formed the bull flag on the 30 and confirmed towards the end of day on increasing bull volume. So the chart does say further upside to come, but on the news kind of day, this volume is not all that impressive, to be honest. So let's see what tomorrow brings. Same idea. Watch for the follow through. And the next is FB, Facebook. Wanted to discuss this because it was extremely bullish. And we're going to have to redraw this. It was extremely bullish, had a nice pullback so far right at today, right at that long-term wedge. Long-term descending wedge. 1, 2, 3, 4, 5, 6, 7. 7 rejections from this trend line. And now we are back testing it. Gonna have to see if we get that follow through reversal tomorrow. Noticeably weaker versus the market today. There was no bear divergence that's formed. So we're gonna need to cool off. Well, actually, the chart's already pretty cooled off. RSI on the daily is 53.42. Easy stop play. If you didn't get in, watch for that similar price action tomorrow. You know, touch it, there is a chance touch. You're gonna have to watch early on. If you see the touch of this trend line again, that's your easy stop play. You know, just right at the trend line. Watch for the reversal. But if early on weakness persists. Let's see if we did today. 7:30. No, it was actually bounce and then faded all day. Okay. So yeah, if you see bear volume coming in early, wouldn't be trading this. But if you see bull volume coming in, this is not significant bull volume. You want to see something like this, or even just these kind of volumes, something that outweighs the last 4 days. Okay, early on, if you see a bull volume come in, that would be a decent bounce play opportunity with easy stop on Facebook. And Airbnb, let's take a look at that. We are bouncing, we gapped down and wicked off of the last key zone, which was the GP that we bounced from last time. So wicking off, we can see this wick here too. Closing on it, closing on it. So, or this was opening on it. So we can see wicking from this key zone, but we did lose that GP, unfortunately. Now, gonna need to see that follow through. Bear with me, let me change this. Because I changed my, due to for YouTube video as well as for Twitter purposes, I have changed my background to completely black instead of grayish black. That was a little bit easier on my eyes. So on the completely black charts, these key zones 8% don't really stand out as much anymore. So raising it a little bit, now it's a lot easier to see. Oh yeah, so much easier on the video too. But I guess on the recording it shows quite a bit of a messier chart now. Let me know what you guys prefer. In the comment down below, let me know what you guys prefer, whether if it's a grayish background or a black background. This my screen, when I look at it, it doesn't bother me that much. It's still kind of opaque, translucent. It doesn't stand out, but from the looks of the recording screen, it looks like it stands out more than what I'm seeing. Yeah. All right. Next is, what do I have? Score. Something on the news this today. What was it? Let me check here. Bill C-218 has been unanimously approved by House of Commons Committee with an important amendment protecting horse racing. Strong momentum continues for regulated sports betting in Canada. Now back to the House for third reading. We urge Parliament to pass this bill quickly. All right. So score added to the core position today, just a little bit. I like where the chart's at. Essentially, we were bouncing from the 0.5. Let's see. See if we can find anything around here. No, nothing too noticeable. All right, so essentially we're just bouncing from the 0.5, I guess, which I'm okay with. Inverse head and shoulders pattern still intact. Not as ideal because of how we broke down from this previous low of the 0.382, but so that reduces the chance of this happening quite a bit. But because we're still bouncing from the 0.5 instead of the GP, the chances are still relatively high. Score looking nice. From, let's see, score MO. So MO, TLRY, looking weak. We're getting a bounce, an early bounce, so we get a gap down and then sort of a buy up. And then today we saw decent bull action, but no bull volume to back it up. So from here, what I want to see is actually a new high forming a daily bear divergence before a pullback. That is based on the price action. It looks like it might happen. Low bull volume pushing it up decently. We did fill the gap today. 50.33, 50.39. We did fill the gap today, so chance that we just complete breakdown from here. MO still relatively strong chart. Gonna have to see where the pullback brings us. GP far away, still at 46, while the price is still at $50. And the further GP, why is this one here? Oh, this one's far GP. The actual GP of this whole move, most recent move, would line up with the key zone. So I would be looking at ideal entry, gonna be right around here, 44.76. And let me change this again. Oh. All right, next is GME. What a crazy bounce on GME today. Congrats, GME bulls. Bull volume started to show up. 60% bounce on GME straight up to that 88. Congrats. Earnings now out of the way. Saw a little bit of a gap down sell off yesterday after earnings, and then today, let's take a look. I wasn't watching this ticker, but let's take a look to see if there was any signs that could have benefited you guys from bounce play. 7 o'clock saw off, low bull volume. 7:30 big bear 7:35. Sorry, this was 7:30. 7:35 big bear volume came in, pushed it down under, formed a very nice 5-minute strong bull divergence. Then we went straight back up, low bull volume. And I think this was your entry signal. Bull volume came in, shot it over. Even if you missed it, that's fine. You wait for it. Wait for that bull flag. 5-minute. This was a beautiful setup. Never broke down under. 5-minute 8. Look at this low bull volume. That entry cannot have been better. From there was just straight shoot up, decreasing bear volume in the middle. Volume climax right here with huge upper wick. Volume climax. And then went up closing higher. But essentially the 5-minute bear divergence started showing up. So we had a quick pullback, but didn't get that much pullback. Then bull volume started coming in again. So this was your second entry signal. You could have caught, what was this? Let's say you had bad entry. This entry, it cannot get that bad. 5-minute 8. Let's say you had a bad exit. You exited right at the close of this candle. That's still a 24% move. And then from there, let's say you had a bad entry. You entered right at the close of this candle. Towards the end of the day, that's another 11% move. Hope somebody caught it. GME is looking great for the bounce. Bullish engulfing candlestick. If we see that follow through tomorrow, 1, 2. There is still a chance at new all-time high. First thing to do, get over that 88. Next, AMC. Did we see similar action? Yes, we did. Bullish engulfing candlestick. Volume is not as nice, and we did reject from the 88. So on AMC, in comparison, the chart is weaker. We were unable to close over this key $11 mark where we saw previous rejections. Rejection finally got over and then gapped up and then broke straight down. Unable to close over it today on that $11 key price to note. So let's see if we get follow through tomorrow. All right, and that's it for today's video. Don't forget to give it a thumbs up. If you're looking for that financial freedom and enjoy the content that we provide, please consider subscribing to our channel where we provide new videos daily. And remember, the best compliment you can give is by spreading the word about our channel. Also, check out our Twitter and website at totalcontroltraders.com and Twitter at _TCTraders_. We offer a subscription model to our chatting platform where trading ideas are shared, charts are reviewed live, as well as my personal trade callouts, which resulted in a 90% correct callout on the last semi-monthly between March 1st to March 15th callouts. Hope you guys stay safe and be in control. Thanks for watching. I will see you in the next video.